Understanding market conditions before placing trades is as important as knowing weather conditions before a pilot flies the airplane. So markets can either be in an uptrend, downtrend, or moving sideways. Generally, identifying market trends is quite confusing. So in this video, we are going to be looking at how to identify these trends and capitalize on them. So without further ado, let's get into it. Yeah, welcome back to UCFS. This channel is all about helping new and struggling traders, even advanced traders, to become acquainted with the necessary information on how to become profitable in the forex market. So support us on this wonderful journey by clicking on the red subscribe button and the bell notification icon to stay connected and receive every secret revealing content about forex trading. And don't forget to drop in the comment section any topics that you would like us to make videos on. So we are here to help you in any way we can. So let's jump into what we have for today. So from our basic knowledge, we know our uptrend to be higher highs and higher lows, and our downtrend to be lower highs and lower lows. Then we have our stock market to be moving sideways. So before you can be able to understand, uh, before you can be able to identify the market trend, you have to understand the concept of a top-down analysis. So from this sketch, we have this one on our left as a daily chart, and this one resembling our H4 time frame. So when the daily chart or the daily time frame is about to reverse, just like we have an uptrend here. So when the market is about to reverse, so we will have a short-term bearish trend on the H4 time frame. So and even the H1 time frame. So, and this caused a lot of confusion to traders. So I will teach you how to match these different time frames to be able to capitalize on it and not get confused anymore. So the first thing you need to do is understand your higher time frame. That is the monthly, the weekly, and the daily chart. So try to build a story from them. What do I mean by that? Try to understand where the price or where price is coming or going to. So it is, if it is coming, is it coming from a discount price or going to a discount price? Is it trying to mitigate an order block or already done so? So try to mark out your higher time frame or higher time frame charts that is pointing out your or marking out your point of interest that you would like to buy or sell from, and then go down to the lower time frames and wait for price to capitalize on the next price movement. So let me show you a total breakdown of how to do this. So here we are on AUD NZD. So this is the monthly chart. So just like I said, you need to build a story from the higher time frames. You need to build a story from the monthly, weekly, daily charts down to the lower time frames. So what can we say about this monthly chart? If you look deeply, we'll see that we have had a break of structure. So the market made a lower low. So what does it signify? So this means that we are in very trend on the monthly chart. But if you go down to the weekly or the daily, let's say the daily chart, you will see that on the daily charts, the market is making higher highs and higher lows. So on the daily chart, the market is bullish. So I'm going to show you how to mesh this information to be able to know how to where and when to enter your trades and how to basically understand where the market is heading. So looking at this monthly chart again, you'll agree with me that we have a nice order block inside this area. By the way, if you don't know much about order blocks, you don't know how to trade order blocks, I would suggest you check the link to a video that I made about order blocks and how to trade them perfectly in the description below. So I explain everything to the best of my knowledge. To do what, check it out. I'm sure you like it. So, so let's continue with this video. So you agree with me that we had a nice order block inside this area, because this other block took out this liquidity in form of equal lows because traders were trapped long, you know. So we had a nice order block inside this area. Therefore, we are going to be considering this range. So we are going to be considering this range. We're going to be considering this range. So we're interested in what price is trying to do inside this area. But that price will go up, continue going lower, or it will go lower from here, or it will continue going up. So from what the monthly chart is giving us, if we take our Fibonacci to check where price might be heading to, if you take your fib from this highs to these lows, we have our discount level inside this area. Just like our discount level is 0.786, between 0.786 and 0.681 of the Fibonacci tool. So this is our discount price. As you can see, our order block is lying perfectly inside these discount levels. So you want to be buying or selling from discount levels, because that's where the smart money, the big institution, that's where they sell or buy from. So we can anticipate, it's quite sensible to anticipate that the price is actually heading to mitigate this order block, to tap into these discount prices. So this big institution is trying to push price into this area, from what I'm seeing. So they're trying to push price into this area to mitigate this order block, because they still have some open position inside this area, because they had to manipulate price with this fake green candle to make it look like the market is trying to buy, so that the less informed traders will start getting into the market, buying the market, and eventually trapped and lose their money. So they manipulated price inside this area. So they still had buy orders. They had to go and close at break even, because those buy orders are actually on drawdown. So they have to go back and mitigate it to close those buy orders and eventually continue going lower, or come a little bit lower, then continue moving up. So having this story in mind, we are anticipating that price is trying to go and mitigate this place. So in view of that, we have our liquidity graph. As you can see, the market took out this trend line. So that's why most of times trend line doesn't work. It hardly most of the time it doesn't. I'm not saying that it doesn't work, it works, but this big institution mostly use this trend line as liquidity. They mainly use it to trap traders. This is just the basic knowledge of forex trading. Everybody knows about trend lines, how to use them. So imagine if everybody is winning using this basic concept. How can it's not actually possible for everybody to be making money. So who is then losing? So you have to kind of level up, try to understand price action, try to understand the market from the big institution perspective, not just basically on the new trading basic knowledge perspective. So what am I trying to say in essence is price tested this trend line quite often and it got broken. So the big institution actually generated liquidity because they needed to push price into this area. So they needed sellers. Just like I normally say, before you can be able to buy in the forex market, you need a seller. So they need much seller inside this zone. So they need much sellers inside this zone so that they can be able to buy this market up into the zone to tap into these discount levels. So seeing this price action, trendline liquidity grabbed So it is now fully to actually say that market is turning bullish to go and mitigate this area. As you can see as well, we had a break of this high. Price took out this high, so the market is starting to turn bullish. So, but the overall trend on the monthly is actually bearish. So you wouldn't want to keep buying above this area, because this is where the market is actually likely to make a turning point. So we have to understand this first. So after understanding this, we now know in the daily we are bullish on the daily and weekly. So this is the major story that you need. The market is trying to mitigate this area. So you now go down to the daily time frame. You now go down to the daily time frame. So from the daily time frame, you need to as well try to understand what price has actually done on daily time frame. Sorry. So here on the daily time frame, we are only going to be looking for buys. Yeah. So why are you looking for buys? Because this market is actually in an uptrend. So the monthly is showing us a bullish trend. So from the monthly perspective, we are trying to mitigate an order block. So we are anticipating, or looking up to see more of buys in this scenario. So looking at the daily charts, we had our recent break of structure right here. This high was taken out. So here this high was taken out. So let's mark it out. So then we are now interested in this range, trying to explain or read a story on what price is likely to do next. So we need to find the other blocks that actually took out this high. As you can see, we had a nice other block inside this area. And before I proceed, if you always wanted to learn the smart money concept, I have a video in the link in the description below, explaining how to trade other blocks. It's actually 5 episodes. That's from episode 1 to episode 5. I actually organize it in a way that you can actually understand it from the scratch. Unlike other YouTube videos, you won't actually see an organized video explaining. It's not actually easy to see videos on YouTube explaining this concept in an orderly form. So here we have uh, another block that actually took out these highs, and as well we had another block inside this area that took out these highs as well. So let's assume price hasn't done this yet. So if you go down to the 4-hour time frame, you will spot another block as well inside before the break of the high. So we had another other block inside this area. Look at our high here. So we need to be spotting the other blocks that broke the recent highs, right from the daily down to the monthly. So this daily order block is actually another block that will be mitigated in the future. As you can see, you're already having liquidity inside this area. So most traders are actually trying to buy this area. And we have other block lying just below this liquidity. So the smart money are going to take out this liquidity in the future. So after taking it out, they will have to mitigate this other block before going up further. So in view of that, before that actually happened, we had a nice price action inside this area. As you can see, we had a nice other block inside this area. So we had another other block inside this area. So, and after this other block was formed, it took out these highs as well. So after that, we had liquidity here in form of your call lows. Just like I said, the market is fractal actually, and what you see on the daily happens as well on the lower time frames. This kind of scenario is what is actually building up on this bigger time frame, this daily time frame. So we're still having this bigger liquidity build up, trying to mitigate this other block, just like it did here. As you can see, we had liquidity build up before price tapped into this discount area, into this other block before moving up further. So the smart money actually trying to manipulate price before tapping into this order block. But let me explain how you would have got this entry right from this point. So let's assume this price action hasn't taken place. So looking at this order block, it broke this structure, it took out these highs. So we are interested in the price turning to this other block with liquidity. So it has to return to this other block with liquidity, because that's how we confirm other blocks. That's actually one of the ways to confirm another block. So after price formed, this liquidity inside this area, so we want to see price come into our discount level. We want to see price go into our discount level. So we need to take our Fibonacci from this, take it from these lows to these highs. So as you can see, price nicely came into our discount level, which is a 0.618 and 0.786 of the Fibonacci tool. So price tapped into this discount level. So you would actually use a lower time frame, such as the 1 hour and the 15 minutes time frame to confirm this entry, because it's actually a 4-hour order block. So we're going to be using the 15 minutes time frame to confirm these entries. Yeah. So let's go down to the 15 minutes time frame. So here we are on the 15 minutes time frame. So here is our H4 order block. So here we have our H4 order block. So we're going to be using the 15 minutes time frame to confirm these trades. So what are we looking for on the 15 minutes time frame? So we actually look for for specific price action. We want to see the same thing that we saw on the H4 time frame. We want to see a 15 minutes time frame order block, break of structure after the formation of the order block. And we want to see liquidity build up as well, and then tap into our 15 minutes order block. So let's go. So here we have our 15 minutes order block. As you can see, we have our 15 minutes order block. So we have our 15 minutes order block, and after the formation of this order block, price took out, broke this high, broke this tiny high here. So this is actually the same thing that we spotted on the higher time frames. So we had another break of structure, price took out these little highs. As you can see, price continued taking up this tiny high. So we had a break of structure. Then after that, we need to see liquidity build up in form of equal lows. So as you can see, we have liquidity inside this area. So this is kind of a specific. You need to see specific things before you take your trades. So just like I've been explaining right from the higher time frame, I'm still explaining the same thing. So this strategy is focused. It's not something that you want to just jump into the market. You need to see specific price actions. So as you can see, I've been repeating this same thing down to the lower time frame. So this is actually to tell you that this strategy is worth it. It's worth to try, to learn it. So as you can see, price took out this liquidity, this equal lows, and tapped into this area. As you can see again, we have to take our Fibonacci to see if price tapped into our discount levels. So here, as you can see as well, price tapped into our discount levels. So it's basically in between the 0.618 and 76 of the Fibonacci tool. So we have price tapped into our discount level, into our order block. Then after that, what happened? let's assume you took your entry, your buy entry inside this area. So taking your buy entry inside this area, your stop loss will practically be below these other blocks. As you can see, it will be below these other blocks. And you take your entry from this area. And as you can see, this is just 15 pips stop loss. So where would you be targeting? You need to be targeting the recent high, looking from the H4 time frame. So let's go and spot where we can actually take our profits from. So on the H4 time frame, you should be targeting the next highs. So as you can see, our next high is on this area. So here we had this high, but price would actually take that out. Our next, the key high that we have here is actually this one before price came down. So this actually, all this movement was actually a retracement. So we need to be targeting these highs. So targeting these highs, you will have a take profit of about 156 pips. So that's actually a 1 to 9, almost a 1 to 10 risk to reward ratio. So this is the kind of trades you need to be catching, So this is actually a breakdown right from the monthly down to the 15 minutes time frame. So do well to actually backtest and try to understand this concept, because it's practically defined. Like, you don't have to try to force yourself to do, it's not actually rocket science. It's just a little price action that you can actually deal with. You need to see the same stuff over and over again. The market is fractal. So as you can see, that's how I would actually would have got this trade. So looking at this H4 time frame, we still have uh the daily order block right below this price action. So here on the daily, we still have this order block that still needs to be mitigated. As you can see, price is actually building liquidity. So if you have a deeper knowledge of Wyckoff schematics, you would actually know that price is actually trying to come into this area, because we are kind of having these highs grabbed. So this is actually a distribution from the Wyckoff schematics. I actually made a video on it as well. You can find it in Learn the Smart Money Concept episodes. I think it should be either the fourth episode or the last episode or thereabout. As you can see, price was actually taking out highs. So we are kind of having a distribution, I would say, in this from this price action. Looking at this price action, we're kind of having a distribution. The price is trying to do the Wyckoff thing and come and mitigate this other block, probably because this is actually generating liquidity. But as you can see, we will likely have a trend line liquidity that needs to be grabbed. As you can see, yeah, we are practically on this trend line. So the smart money, they know all this knowledge. So they will actually bounce a little bit off from this trend line, take it out, tap into this area, into this other block. Then from there, they might continue moving up. So we have this trend line liquidity. That's how it is pronounced, looking from the big institution trading strategy way. So this is just the basic knowledge. First tab, second tab. So most people are looking to buy from the third tab. So that's actually where they are going to get liquidated, because I spot a distribution right inside this area. So I think that will be all for this video. If you like this video, give it a thumbs up. Try to comment any topics that you like us to make videos on. And stay connected by subscribing so that we get every video that we will be publishing in the nearest future.